Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the Eurozone to the Japanese yen. And first, we'll be talking about fundamental analysis before we move right down to technical analysis, which is purely what we're going to be seeing on the chart now. We notice that the shaded currency is soft versus the Japanese yen, which is staging a comeback against most G10 pairs. And the Euro JPY daily chart illustrates the pair as neutral to downwards, but the downtrend loses steam. In the short term, the Euro JPY might print a leg before dipping towards the 134.00 zones, and the Euro JPY creeps lower for the third consecutive day, shifting its bias from neutral to downwards due to a heightened tensions between the US and, of course, the China ahead of the visit of the US House Speaker Pelosi to Taiwan. Also, traders scaled back their bets in the US stock market as Fed officials push back against the possible dovish tilt, while a tranche of policy makers would cross wires on Tuesday at the time of writing. Now, the Euro JPY is trading at the 135.15 zone. Now, what to see on the technical analysis? We're currently on the 4 hours time frame. So we have noticed that the daily chart, of course, illustrates that appear as neutral to downward biased. Once the Euro JPY broke below the July 8 daily low at 136.85, it accelerated its dive towards the 135.00 mark. Nevertheless, the Euro JPY downtrend is on its way to a 200-day EMA at 133.69, but near-term correction towards the 136.00 figure is on the cards. Now, Euro JPY 1 hour chart. In the short term, the Euro JPY shows that the cross is consolidating around the low of 135.00, confirmed by the relative strength index, trapped within the 30 to 45 readings. Therefore, Euro JPY sellers are taking a breather before pushing the pair towards free 3-month lows below 134.96. Now, if Euro JPY bulls step in, the Euro JPY will challenge the confluence of the 50-hour EMA and the R1 daily pivot at 135.89. Now, if that play works, the Euro JPY first support would be 135.00, and a break below will expose the S1 daily pivot at 134.57, and once cleared, the next support will be the X2 pivot point at 134.11. Now, if we're to make an entry to this trade and moving back to a 1 hour time frame, we're going to make sure we have our TP somewhere at the 135.50 zone, and an entry from this point. We're looking at nothing less than 145 pips plus from this trader, which is good money, of course. And that's our technical analysis on today's currency pair, the Euro JPY. Now let's move over to the stock markets. Right now, today on the stock markets, we'll be having a look at Morgan Stanley. And we have noticed that the pair has been doing extremely well during this time in the period of Tuesday, and you don't buy into the stock market big bounce after Wednesday's Fed decision. As Wall Street biggest bears on the stock market, Morgan Stanley has warned that a possible Fed bounce, post-Fed bounce, is a trap. And Wall Street, of course, banks are divided over size of Fed's high rates, and Morgan Stanley sounds like Admiral act back after Star Wars on the bear market generally. Now, what to expect from this? We have a most likely dip to the downside, and we are taking a look at the 81.05 zone. So if we have to make an entry to this trade, so we are looking out for nothing less than 200 pips or more from this trade, which is going to make a little bit more depth on this market. And we have two zones, which is at the 81.06 and another at the 80.43. So we're looking at an extension of 30 pips and also 35 pips, or could even end up being up to about 50 pips, which spots another most recent support zone. So if we're to make an entry from this, we are expected to have a long sellout reach after a double whammy at this point, and a more possible downside move. And that's our technical analysis on today's commodity. Morgan Stanley, I remain your host, Nick. Bye for now.